OpenAI Incorporated is a software company located in San Francisco, California, and if you've been paying attention to the news lately, you've probably heard about them. They make the popular ChatGPT chatbot, which promises to revolutionize computing through artificial intelligence, or AI. Although academic researchers have been studying AI for decades, ChatGPT is one of the first software products to make use of a relatively recent breakthrough that took place at Google around 2017, commonly referred to as transformers. Transformers take all of the words in a user's input into account, rather than looking at words only in sequence, as prior models tended to do. Once it released ChatGPT in 2022, OpenAI attracted the interest of Microsoft, ultimately pitting some of the largest technology companies in the world against each other in a sort of arms race to achieve AI dominance first. Microsoft reportedly invested $13 billion in the company, a transaction now being investigated by the Federal Trade Commission. Which brings us to the recent news. On November 17, 2023, about a year after ChatGPT's public release, OpenAI CEO Sam Altman was suddenly forced out of his role by the company's board of directors in a so-called leadership transition. That transition was anything but smooth. In the span of roughly a week, the company went through 2 interim CEOs, was the target of an intense, high-pressure lobbying campaign by Altman's allies to have him reinstated, saw most of its board resign, and had new board members added, and ultimately wound back up with Altman at the helm after he had claimed that he and former board chairman Greg Brockman were decamping to Microsoft. Microsoft itself had been blindsided, with CEO Satya Nadella reportedly in the dark throughout much of the leadership crisis. The media covered the debacle as a front-page human interest story, with Sam Altman taking the role of lead character. But here at PlainSite, we like to focus on the story the media isn't telling, based on concrete facts and official documents. And in OpenAI's case, that story can be found in its tax returns. Corporate tax returns are not typically public, but OpenAI isn't a typical company. OpenAI Incorporated was formed in Delaware on January 6, 2016, and then registered with the California Secretary of State on January 7, 2016. A year and a half later, on August 28, 2017, it registered with the California Attorney General's Registry of Charitable Trust as a tax-exempt organization under Section 501c3 of the Internal Revenue Code, which is just Title 26 of the United States Code. In other words, despite looking for all intents and purposes like a software company, OpenAI is a nonprofit organization. The nominal reason for incorporating OpenAI as a non-stock corporation is that its founders, including Sam Altman and Elon Musk, wanted the company to serve as something of an academic research institute whose only goal was to further humanity through AI. But there are a lot of reasons to question this humble narrative. Foremost among them is that it didn't take long for a number of for-profit OpenAI companies to spring into existence, which were then made subsidiaries of the non-profit parent company. Let's pause for a second to just reflect on that. OpenAI is a non-profit organization, exempt from federal income tax, with for-profit subsidiaries. Does that make any sense? It doesn't. So we went to OpenAI's headquarters in San Francisco to request a copy of its most recent IRS Form 990, the annual tax return for exempt organizations, pursuant to 26 U.S.C. 6104D, the federal law that allows the public to request tax returns of any nonprofit in person and requires the nonprofit to provide them, quote, immediately, which generally means inside their offices, in a room with space to take notes, on the same day. Here's how that went.
Sir, excuse me, you need to wait outside. I've told you before,
I
this
actually
is private
don't.
property.
It's not.
Thank
Please
you.
do not touch me,
Please,
sir.
This is the third time.
Please
I've
do
done
not
this.
touch me, sir.
Hang on.
Now you may be wondering, what is in that tax return that led to a security guard deciding to assault a member of the public? Security guards have the right to exercise the minimum force necessary to expel a trespasser, but here, 2 police officers were already on the scene, and most importantly, no one was actually trespassing thanks to legal authority granted by a federal law the security guard refused to read when given the chance. Well, now we know. We finally managed to obtain the OpenAI IRS Form 990 for 2022, which so far has not been published anywhere else. Here's what it says. Page 1 of the return is already fairly remarkable because it states that OpenAI Incorporated employed 2 individuals in calendar year 2022, which is obviously not true. There were 2 contractors and 2 employees in the entrance to its headquarters alone trying to keep me out.
He doesn't belong here. Get him outside the building.
Now, the company could argue that those employees didn't work directly for the nonprofit organization, but rather for one of its subsidiaries. But that naturally raises the question of why the subsidiaries are not included in this return's calculations. The answer is too complex to get into right now thanks to the infinite convolution of the Internal Revenue Code, but we'll see more of that type of obfuscation in later pages. Notably, OpenAI claims that its parent company received just $1,611 in contributions and grants for the tax year 2022 when it released ChatGPT. Microsoft's $13 billion investment, which would not be considered a contribution or grant, didn't arrive until 2023, but regardless, the number seems suspiciously low for an organization that employs hundreds of people to develop and market a product that it sells for $20 a month to thousands of people and companies. The nonprofit's total reported expenses were $801,611, or about the same as the salary that the company reportedly pays each of its software engineers each year. It ended 2022 with net assets just north of $18.5 million. Page 2 is interesting only in that it claims that the nonprofit did not make any significant changes in how it conducts program services. This seems a little bit hard to believe given the launch of ChatGPT during 2022, which, to hear the press tell it, has revolutionized the computer industry. The next interesting piece of information is on page 4, which involves OpenAI's answer to question 33. Did the organization own 100% of an entity disregarded as separate from the organization under IRS regulations? Since the answer is yes, it also has to complete Schedule R, Part 1. The answer to the next question requires OpenAI to also complete Schedule R, Parts 2, 3, or 4. Page 6 features Part 6, Section B, line 13, which asks if OpenAI has a written whistleblower policy. 6 years after the company was founded, its answer is still no. Line 16 is also a red flag. OpenAI answered that it invests in, contributes assets to, or participates in a joint venture with taxable entities, but that it does not have any written policy or procedure to ensure its actions are consistent with being a tax-exempt organization. Line 18 is somewhat amusing. OpenAI marked upon request to answer how it made its tax records available to the public. There is no box for claiming that our office is private property and assaulting the requester after calling the police and providing the return via a law firm weeks later only after giving it to other journalists first and insisting that the request amounted to harassment, which is presumably what they would have checked were such a box available. Page 7 lists the salaries of OpenAI's officers and directors. Sam Altman, who has reportedly spent $85 million or so on real estate alone, receives a salary of $62,400 per year from the nonprofit. Ilya Sutskever makes $312,849, second only to Chris Clark, the Secretary-Treasurer. Page 9 shows that OpenAI made $42,874 in investment income. This presumably does not include investment income from the Delaware corporations formed in OpenAI's name that exist to invest in other startups making use of ChatGPT. Pages 10 to 12 feature some highly misleading financial figures because, once again, OpenAI's accountants are providing only a tiny slice of the information about the full group of entities. The notion that OpenAI is only spending $1.3 million per year on expenses is simply false. Page 14, which is Schedule A, page 2, shows that since 2018, OpenAI has received about $86 million in grants. But most of that was in 2018 and 2019, with about $2.7 million in 2020. The sudden drop-off may reflect the fact that most of that money came from one person, Elon Musk. At various times, Musk has insisted that OpenAI needed to move faster, but also that it needed to proceed cautiously because of his fear, supposedly keeping him up at night, that artificial intelligence could end humanity. After that, strangely, no one seemed to want to donate to a nonprofit furthering artificial intelligence research. Schedule C for 2022, starting on page 21, shows no lobbying or political activities, but page 22 does reveal some political spending under the category of other exempt purpose expenditures. Sam Altman testified before Congress later on May 16, 2023. Page 28, which is Schedule I, reveals a grant to Duke University for $333,333 and a second, much smaller grant of $30,000 to NYX Arts LLC in San Francisco for community engagement on AI impact. That's it for OpenAI's grants, amounting to less than 2% of its assets. Page 30 gets into some interesting details, especially line 3, which talks about CEO compensation. On page 32, the company states that there is an equity-based compensation arrangement as part of a related organization. The accountants deliberately leave it unstated exactly which organization is the related organization they're talking about, or which specific individuals are benefiting from the equity-based compensation arrangement from a subsidiary of a company that was founded as a corporation without stock. Pages 34 to 38 are a rehash of the same boilerplate that OpenAI has filed in previous 990 forms. The company specifically admits, yet again, that it does not have a written joint venture policy with its controlled partnership, OpenAI LP. And this is somewhat shocking. Without a written joint venture policy, it's up to the whim of the CEO to decide what falls under the nonprofit and what doesn't. It makes the entire structure questionable and ripe for abuse, and it's remarkable that not a single major mainstream publication has reported on this fact. And although the subsidiary partnership is not supposed to maximize profits, We've seen that in practice, that goal is more abstract for some company leaders and more concrete for others. This is part of what Microsoft CEO Satya Nadella was referring to when he said he wanted to see a governance change at OpenAI. With multi-trillion-dollar partners, running a software company like OpenAI as a nonprofit organization is a practical impossibility. As Nadella has also likely been counseled, it's also highly likely that OpenAI's corporate structure is illegal, jeopardizing both the nonprofit's exempt status and Microsoft's investment. Had any government regulator ever looked into it, there's simply no way the company could proceed to operate without a written joint venture agreement. Given the press around Altman in the past month, this issue seems ripe for review, which could be the real reason why former Secretary of the Treasury Larry Summers, who used to oversee the IRS, was invited to join the board. Schedule R on pages 39 to 43 is where things get most interesting. This is the schedule that lists the related organizations and unrelated partnerships. And you have to pay close attention to the terminology used because different phrases that sound basically the same have very different meanings. A quote, disregarded entity actually means an entity that is considered the same as the partner company, which here is OpenAI Incorporated, the nonprofit, because the IRS is using the word disregarded to mean disregarded as separate. Meanwhile, related organizations are treated as separate, and they can come in different flavors. Corporations, which are listed in Part 4, and partnerships, which are listed in Part 3. As a side note, you almost never see partnerships in software companies in Silicon Valley. OpenAI lists two related partnerships, one of which recently changed its name to Estas LP, and the other which is OpenAI LP, and one corporation, which is OpenAI LLC, and LLC being taxed as a C corporation. In other words, to understand OpenAI's governance, you have to understand how one disregarded entity, two partnerships, and one LLC are related to each other, and this doesn't even list all the other OpenAI entities visible on the California Secretary of State's business search page. OpenAI is playing a shell game, in part to prevent the public from knowing exactly what is going on with the company, but also likely to make regulation more difficult. After all, who is to say which company is doing what according to which mission? You can view the full document for yourself on PlainSite using the link in the description for this video. Finally, it's worth noting that Form 990 is not the only tax filing that OpenAI is required to file. It also has to file California Form RRF-1 with the Office of the Attorney General, which it does in the middle of November each year, as that's 6 months after the May deadline for Form 990. 6-month extensions from the IRS are automatically approved. Notably, for tax year 2021, OpenAI filed its Form RRF-1 on November 17, 2022, and in 2023, on November 17th, Sam Altman was fired. Could it be because that form asks whether nonprofit funds have been abused in the past year, a question OpenAI's board might be nervous about answering with Altman at the helm, flying to the Middle East to solicit investment for projects it doesn't necessarily approve of, that this form was part of the reason that they decided to finally fire Sam Altman? We don't know yet because OpenAI still hasn't filed its form for the most recent complete tax year. It's late. ChatGPT and similar artificial intelligence tools may, in the long run, bring newfound prosperity to humanity, but there are certainly pitfalls to watch out for. The technology has a tendency to make errors, and it's noteworthy that when we asked ChatGPT if OpenAI Incorporated is a nonprofit organization, it equivocated for a while before finally settling on the wrong answer.